Let's talk about Roth conversion legacy planning. When it comes to Roth conversions, there are so many things to analyze. And check out my channel. I've done many videos that are very analytical in nature. They're going to use actual numbers. This is not one of those videos, but this is just as important in my opinion. When you think about Roth conversions, you need to start somewhere. Now, often you're going to start with your goals, but that's too broad. What do you mean goals? I think the best way to start is what I would call legacy goals. That means, what are you trying to solve for? And in reality, when it comes to Roth conversions, you simply can use a framework where you just use three numbers. Are you solving for 2? Are you solving for 1? Are you solving for 0? In this video, I'm going to explain what those three numbers mean. That's really all you need to know to get started when it comes to legacy planning and Roth conversions. My name's Forrest Dutton. I am the owner of Brightworks Financial Planning. I'm a certified financial planner, and I love doing these videos. I hope that they give you confidence in retirement. This video is not meant to be personal, financial, tax, or investment advice. It's just for education. Let's jump in. So let's start with number 2. Simply put, this is two people. This is married filing jointly. This assumes a couple that's retiring, and they want to optimize for trying to pay the least tax over their entire retirement period. So maybe it's retiring at 55, maybe it's 60, maybe it's 62, whatever you assume that you're going to live to 90, 95, 100, whatever that number is. You want to do some planning early on so that you pay the least amount of taxes over that lifetime. Now that requires some inputs, but it's good to know what you're actually solving for, because if that's what matters to you, you're much more likely to do some aggressive things up front in the years where you have the ability to do so. So with the rules around required minimum distributions and Social Security, there really is an optimal window to start thinking about these things. So really, after you hit age 70, you don't have as much flexibility to do Roth conversions as you do before, because 70 is as long as you can delay Social Security. For many people, there could be pension income, and then after that, you hit required minimum distribution. So if you're solving for 2, you know, okay, we have to come up with a plan, and one that is fairly aggressive between when we retire and when we hit these ages. So that at least gives you a framework of what to work from. So once you have that initial framework, then you can start to build out what your income sources look like, what the trade-offs are, what will happen when you hit Medicare age, what about the IRMA surcharges, all of these other things that you can consider. What is the breakdown of our assets? How much do we have in taxable brokerage? How much do we have in pre-tax IRAs? How much in Roth? And how can we work this together to create a strategy that works for us? So really just thinking through, again, the legacy is your own, right? When you're doing that kind of legacy planning, the legacy is your own. You are solving for yourselves as a group. Now, this also assumes 2 things: that you live a long life and that you live lives that are going to end somewhat similarly, which again, in reality, we don't know. But this is great for couples that are similar ages and retire. So let's move on to number 1, because age is a great segue. So when would you want to solve for 1? Well, one reason would be if you have a large age gap. So say you have a 15-year age gap between spouses, it's pretty easy to assume that one is going to outlive the other. Or if you look at health, one is not in good health or has a very, very strong family history that lends itself to thinking, I think we need to plan for a period where one spouse is left behind. And that's why you need to remember the number 1. You're making your Roth conversion decisions trying to optimize for the lifetime taxes of that spouse left behind. That is the primary focus, and that is the main reason you want to do Roth conversions. So in that case, that's going to be a different plan than someone who optimizes for 2. So that being the case, you're going to have a different framework and a different lens by which you're looking at this Roth conversion legacy planning. So that's number 1. Let's move on to 0. What do I mean by 0? Well, it means you're not really thinking about yourself as a couple. You're not really thinking about one spouse left behind. You're actually thinking about after you're both gone. So it means you're not planning for either one of you. There could be a couple reasons for this. One might be that you know that you have way more money than you're ever going to need, and you're actually in the highest tax bracket. And this may sound kind of counterintuitive, but I think it will make sense when I explain it. So one scenario here may be you're in the 37% tax bracket, and you know you're always going to be. So in this case, what you may want to do is go ahead and leave some tax-free money to your heirs, because if you know that your family members are also in the situation that you are in, but you have the ability to do Roth conversions and you have plenty of money to do it, it's another way for you to help them, because if they inherit your money and they themselves are in the 37% tax bracket, well, then a lot of it may end up being more than that, because if you think about federal tax and state tax, if they're in a high state tax, in their higher working years, assuming this is an adult child that inherits this, they're just going to have to pay a lot of tax on what you leave behind. And you might say, you know what, I'm just going to prepay it forward. So this isn't an arbitrage decision. It's just a flexibility decision, to be clear, because both are paying the same tax. So if you're in the highest tax bracket and they're in the highest tax bracket, in reality, it's either you're paying the same or they're paying the same, but you're thinking, you know what, I want to give them that gift because it's easier for me to pay it in retirement. I have a plethora of money, not going to need it. Meanwhile, when people inherit in midlife, they need liquidity, so it could be helpful to just have a large Roth IRA that they could just take the money out and not have to worry about the taxes. Now, that is a least common scenario, but at least wanted to mention it. The more common scenario is that you are in a lower tax bracket and you know your children or whoever you leave your pre-tax assets to is in a higher tax bracket. So let's just use 24% and 37%. You are in the 24% bracket. You know that when you leave, but you don't actually need your income. Maybe you have combined Social Security and a pension, some other sources of income, rental income, so that you're not actually drawing from these accounts. So even with this, you would want to do conversions to plan to give to the next generation, because you wouldn't want to lose that to more taxes in the next generation. So that would be another reason. Now, there could be a reverse to this, that you know that you don't need most of your retirement income, but you're not sold on that you're going to be in a much higher tax bracket later. You think you're just going to be in the same tax bracket, but in reality, you may have a child who doesn't make much money at all. Maybe they do nonprofit work. Maybe they work for a ministry. You know that they're always going to be in a lower tax bracket. In that case, you're not in a real huge rush to do conversions. So you can see how planning for zero could go either way, depending on what your goals are. And there's really no right or wrong here. Like I said, there are some people that choose to do conversions in the 37% tax bracket. I know that sounds kind of crazy to some people, but in reality, sometimes the goal is just you want to create some tax-free money and some flexibility and less stress for either yourselves or the next generation. So in this case, I wanted to just give you that framework of 210 when you think about starting your Roth conversion conversations, when you think, what am I really after here? That's the first question to ask, and then everything else flows from there. Because let's think about this. If you start with this as a framework, let's say that you want to optimize for 2. That's your ultimate goal. You can start there, but then you have to ask yourself, do I have the ability to optimize for 2? Meaning, when am I actually retiring? Do I have a window to do this? What are the structures of my accounts? And if those questions can't be answered, then you sometimes have to pivot and you have to make a different plan. So if you can answer that question right off the bat, then it's much easier for you to start asking the harder questions, which is, what are the trade-offs? What are the assumptions we're using? Because in reality, it's very, very difficult to know the answer to these things. In some cases, it's a slam dunk, but in most cases, it's gray. So as a financial planner, this really starts and ends with your goals. So answer this question first. Am I solving for 2, 1, or 0? Love to know what your thoughts are. Please comment below. As always, like and subscribe, and I will see you guys on the next video.